We come again to you today with big news and very cheering one at that. At its meeting of Wednesday, 11th November 2020, the Federal Executive Council approved the Finance Bill 2020 for onward transmission to the National Assembly. This is the second time in a row that the Finance Bill is accompanying the Appropriation Bill. The first, which was also the first in 20 years, being the Finance Bill 2019. Now, we must hasten to remind you that the Finance Act 2019 guided tax administration in the year 2020, while the new bill, when it becomes an act, will guide tax administration in the year 2021. There is a debate out there as to whether Finance Act 2019 should have been titled Finance Act 2020 and whether this new one should be titled Finance Act 2021. That is a matter for another day, and we'll leave it to the finance experts. At a press briefing at the end of the Federal Executive Council meeting, the Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed, presented highlights of the finance bill.
The broad principle is to consider how we will have adequate macroeconomic strategies to attract investment, to be able to grow the economy on a sustainable basis, but also to create jobs as the immediate fiscal strategies that we need to put in place to accelerate domestic revenue mobilization in response to the COVID-19 pandemic and the recent decline in the economy.
Up for amendments in the Finance Bill 2020 are a whopping number of 13 tax laws.
These amendments include providing fiscal relief for corporate taxpayers, for instance, by reducing the applicable minimum tax rate for 2 consecutive years, so from 0.5% to 0.25%. We also make provision to provide an incentive for mass transit by reducing the import duties and the levies for large tractors, for buses and other motor vehicles. The reason for us is to reduce the cost of transportation, which is a major driver of inflation, especially food inflation.
Finance Bill 2020 goes a step further than that of 2019 in extending tax exemption for small businesses to education tax.
And I gave an example of the changes that we're making in the tax law. In the last Finance Bill 2019, we reduced taxes from 30% to 20% for enterprises that have turnover of between 25 million to 100 million. And we also moved taxes from 30% to 0% for enterprises that have turnover of 25 million and below, which means they pay no taxes. What we're doing in the Finance Bill 2020 is to further remove the education tax of 2% for that lower category of enterprises that have turnover of 25 million and below. This is the time to cut down on taxes, to not increase taxes at all, and also to not increase levies. Again, no increase in taxes, no increase in VAT.
The next step is for the National Assembly to consider the bill and pass it into law. Of course, as you very well know, that will include, among other things, public hearing. We look forward to that as we record the robust public hearing that led to the passage of Finance Act 2019. We move on as we launch into today's edition of our Tax Law Clinic. Today, we are focusing on personal income tax. Yes, personal income tax. That, you will agree, is the one that affects everybody, whether you're in business or in paid employment. The law and administration of personal income tax in Nigeria are unique. On one hand, the law is a federal law, but on the other hand, the administration, the collection is handled by the states. the FRS used to collect personal income tax from residents of the Federal Capital Territory, but with the creation of the FCT IRS, that is now history. So the FRS is now only left with the collection of personal income tax from officers and men of the armed forces and the police, as well as officials of the Ministry of Foreign Affairs. The FRS also collects personal income tax from non-resident individuals, men and women who earn income in Nigeria but spend less than 183 days in a year in the country. The architecture of personal income tax administration in Nigeria can be best understood from a close study of the 1954 Federal Constitution. Under that constitution, the regions were conferred with the powers to collect personal taxes and share the proceeds with the local governments under their jurisdictions. The next important influence on Nigerian tax policy was the Reisman Commission, which was set up in 1957 to review the system. By then, there were cases of double taxation and a lack of harmony in the tax rates of the regions. It was thought then that while the regions should continue to have exclusive control of personal income tax, the federal parliament should be given powers to make a model legislation directed at integrating the system and securing uniform principles for the taxation of income taxes among the regions. Provisions which were aimed at conferring necessary powers on the federal parliament were incorporated in the 1960 Constitution, sections 70 and 76. Under the authority of those provisions, the government enacted the Income Tax Management Act of 1961. In accordance with its purpose, this act created a general framework within which the regions could operate and ensure that the same income is not taxed by more than one tax authority. However, the regions remained free to enact their own tax laws, but they had to make those laws compatible with ITMAN. The personal income tax legislation has since undergone various amendments, the latest being the Personal Income Tax Amendment Act 2011. The personal income tax rate is applied on a graduated scale on taxable annual income as is set out in the table on your screen. The personal income tax so determined is payable to the state tax authority where the taxpayer is domiciled. Employers are required to deduct, account and remit personal income tax due on the employment income of their employees through the pay-as-you-earn system. Pay-as-you-earn tax must be remitted on or before the 10th day of the month following the month of payment of salary. For example, payee tax deducted from November salary should be remitted by the 10th of December. We want to round up this first leg of our feature on personal income tax by sharing with you examples of how to calculate payee tax on an employee. Remember that we showed you earlier the graduated scale on taxable income. For computation of payee, the 6th schedule of the Personal Income Tax Amendment Act 2011 talks about a consolidated relief allowance at a flat rate of 200,000 naira plus 20% of the gross income, following which the following, referred to as tax exempt, are deducted: National Housing Fund Contribution, National Health Insurance Scheme, Life Assurance Premium, National Pension Scheme, and gratuities. After the consolidated relief allowance and the tax-exempt items have been granted in accordance with paragraphs 1 and 2 of the 6th schedule, the balance of income shall be taxed as specified in the tax table. We wrap up with 2 examples. Emeka is on a salary of 1,080,000 naira, while Ibrahim is on a salary of 1,920,000 naira. As you can see, to take full advantage of the so-called tax-exempt items, the employee must subscribe to all of them. In the case of Emeka and Ibrahim, they only subscribe to the National Pension Scheme. So, have you subscribed to the National Housing Fund? Do you partake in the National Health Insurance Scheme? Do you have a life assurance policy? All these have effects on the quantum of the personal income tax that you pay. Without those deductions, after consolidated relief of 200,000 naira plus 20% of gross income, the balance in your hands is charged to tax at the rates on the table on your screen. Next, we'll look at the second leg of personal income tax, direct assessment, under which partnerships and enterprises are brought to tax. Thank you for staying with us. The 22nd Annual Tax Conference has come and gone. It was a very good outing, very, very good. It was an intellectual feast for the cross-fertilization of ideas. It was a melting pot for professionals of all hue. It was a meeting point for networking. Beginning from today, we would be serving you echoes from the 22nd Annual Tax Conference. We'll begin with the assessment of some of the delegates. So what are you taking away from this year's conference?
For me, I have a lot to take home. I've learned a lot. I've networked a lot with a lot of people, met new people, met a lot of luminaries in tax and other professions, and we've been able to rub minds together. And it's like a trainer, so we're all learning and taking things out of here to know that tax is key to economic development in Nigeria and in other worlds too.
I'm impressed by what I've seen at this conference, the way it is organized, and the way we all compare ourselves. One is very happy. It's near perfection. So that is one. Two, one has learned quite a lot of new things by way of interaction and also from the speakers and facilitators or speakers during sessions. We have learned quite a number of things about the personal income tax, the corporate tax, and how these things are affected, or as it affects the individuals and the corporate world. And also we have seen a lot of things from different perspectives, from the regulatory perspective, from the government, from the taxpayer's perspective, and from even the tax practitioner administrator's perspective.
So we're looking at the theme of this year's annual tax conference. What is the connection between taxation and economic competitiveness?
There is a kind of nexus between the competitiveness and the taxation as a whole, in terms of how do you pay tax, in terms of the level of in Nigeria, country where we have the same base in terms of paying tax, in terms of whether you go to state A or state B, you pay the same amount of money, but in terms of the cost of living that particular area, it's totally different. So you find out that taxation that you already suffered in A did not take account of your cost of living.
Day 1, Thursday the 5th of November, the lead paper on the theme of the conference was presented by Mr. Olakunle Alake, Group Managing Director, Dangote Industries Limited. In dealing with the topic, Mr. Alake spoke first about ease of doing business in Nigeria.
Ease of doing business in Nigeria. Capital funding is a requirement for the growth and expansion of any country, and taxation is a veritable and sustainable source of such government funding. However, there should be a striking balance between the need for capital expansion of an economy and the dynamics of applying fiscal policies to drive economic development. Taxation has been identified as a fiscal tool for managing the economy, and the ease of paying taxes is an integral part of the government's drive towards ease of doing business. A review of Nigeria's progression of the ease of doing business scale based on the World Bank Group ranking of ease of paying taxes shows that Nigeria has moved from 182 in 2017 to 159 in 2020. By the World Bank statistics, Nigeria climbing 15 places on ease of doing business index is a development that's indicative of the success in the reforms carried out by the Nigerian government as a fallout of FEC initiatives.
Mr. Lake proceeded to take a peep into 2021.
This is a snapshot of our 2021 budget. Based on this budget, all revenue will account for about 25% of the projected revenue in the budget, while not all revenue, including revenue from independent sources, will account for remaining 75%. I must make one point here. As part of the data that you see at the OECD presentation on taxation data across the world,
Mr. Lake concluded this way.
Economic competitiveness will help Nigeria to achieve economic prosperity, but this will involve deliberate government input as well as private sector participation. I think the private sector is ready. We are ready to partner with government. Whatever government wants, they should just show us the direction and provide us with the enabling environment. Because for us, if the environment is good and is friendly, we will thrive better and will do more.
Mr. Alake's paper was a highly seminal paper, and it therefore attracted robust reactions from the fully packed hall.
The Finance Act 2019 has introduced quite a number of changes into the Nigerian tax system. Some of the changes that are introduced are the changes that are relevant to SMEs. For example, the small companies, they are now, if they have a turnover that is from 25 million naira and below, they are excluded from payment of companies' income tax. They are also not to file returns, they are not to file VAT returns, they are also excluded from some penalties. So my own point is that by the time the Finance Act comes into play fully, it will be difficult to capture any significant revenue from the informal sector, because quite a number of the companies constituting the informal sector, that is the hard-to-tax group, generally their turnover are likely to be under 25 million. So if they are excluded from payment of tax, from filing of VAT returns and other similar taxes that they enjoy, because it's in tax incentives for the informal sector, how are we now going to get any significant revenue from the informal sector?
Mr. Fatai Folarin was one of the discussants of Mr. Lake's paper. He responded to Professor Shomori's observation.
The basic point around we're talking about here is that we actually recognize the fact that the Finance Act went after tried to make some modification to the existing law by recognizing the informal sector and also providing a lot of tax incentive. The idea there, when it's constructed and discussed, was to actually first encourage the informal sector to come into the economic space, come into the taxation net. We know them, we have a sense of them, and we know the people and individuals involved. So the idea is not basically to focus only on the direct tax element, but basically to focus first, when you look at it at the corporate level, the ability of those sectors to register for tax, and they can charge VAT. So we're looking at the indirect tax aspect of what they could contribute in this space. And once they are able to do that, we started to make the essence of taxation, correcting the essence of taxation by bringing some of the balance in the economy. And that's the first effort. The second effort is also to be able to recognize the individuals and be able to assess their level of activities and productions and how their companies are doing, and they can also gradually be introduced and be brought into the income tax net. I mean, those are some of those essential reasons why this is in place. I can tell you, if we have more of those informal sector registered with our business environment, with Corporate Affairs Commission and all federal and state tax authorities, you will start seeing some of those benefits that we're looking at.
Mr. Theophilus Emuwa was chairman of the session.
There's a question which I will be inviting the chairman of the Lagos Internal Revenue Service to respond to. It's about how to get the high net worth people who are presently not in the tax net or not paying enough appropriate taxes to pay more.
Now, there are various problems why some people might not pay tax. This includes the poor identity management system that we have in the nation. At the moment, it's very difficult to identify a lot of people, especially if you are not involved in any government transactions. So there's been a lot of effort in recent time to improve on the identity management system. All the tax authorities are spending a lot of time and resources in trying to develop a tax identification number. If everybody has a tax identification number, then it's probably easier to track people. But even if you track people, how do you determine the incomes of these people? We have an economy that is largely cash-based, so that causes a lot of problem. If you do your transactions in cash, then how do you fall into the net? So a lot of people have advocated that we concentrate more on indirect taxes, because through indirect taxes, you are able to make a lot of people pay taxes. Also, in the wisdom of our fathers, they introduced the withholding tax system, which means that there's an onus on a lot of organizations to deduct from people's earnings. So that's another way by which people have been paying taxes. But here in Lagos State, what we are doing is to try and expand our database. Everything starts from expanding the database. When we have a very robust database and can account for all the taxable individuals in the state, then we are able to do a lot more work. But trust me, if you are one of the people, I don't expect anybody here to be one of those people, but if you are one of the people, just know that the net is coming for you, and it's a matter of time. So yes, people are dodging taxes, but gradually they will come into the net. And most rich people invest one way or the other. If they invest in buying properties, then they are in the net. If they invest in shares, then they are in the net. So some people are under, or rather presume that a lot of big men do not pay taxes. We can talk of them not paying adequate taxes, but most of them, one way or the other, pay some taxes. But of course, it's not lost on us that we have to put in every effort to ensure that everybody comes into the net, and we are really doing that.
I thank the chairman of LRS for that. One or two things he didn't mention, because he probably didn't want to frighten you, is that Lagos State now asks for your BVN. And with your BVN, you know what that means. They can track all your bank accounts, correct? I mean, the FRS did something similar a year or two ago, where they were accessing bank accounts directly, and from there they could tell what your turnover was, and they were instructing banks to block accounts of companies whose tax affairs did not appear to be in order.
A nascent identity management scheme, a predominantly cash economy. That is what the tax authorities are battling with. The lead paper presentation was followed by various panel sessions over the next 2 days, all centering around the theme of the conference. You can be sure that more from the 22nd Annual Tax Conference will come to you in upcoming episodes of Tax Matters. Do well to keep a date with us next week on this same station, same day of the week, same time of the day. Please don't forget that you can watch this episode and previous ones on our YouTube channel. You can follow us on Twitter, on Facebook, and please keep your comments coming. Thank you for watching.